Hi, welcome to Market in a Minute. Man, it was hot in Denver over the weekend. I think we'll have to go to Florida just to cool off. um, as oil comes back down, the market should like it and continue on its upward trend. And then the market's going to start to discount lower interest rates. It could be three, four, it could be, full eight cuts, but the market's going to start to discount that and probably go higher, if not the individual sectors of the market, maybe to have some big moves. So the stock market update. So we're not surprised with Iran. We think they need to complete the task and have regime change. What's the point of leaving that crazy supreme leader in place? He's just going to regroup and re-energize over time. So maybe there'll be an opportunity for Trump or Netanyahu to take him out for some reason. But we think that should be done. And then one of the concerns that we had with all this is that China flew in a couple of cargo planes secretly into Iran. We kind of wonder what was on it or what they were taking out. So we don't think it's all over yet, but we think largely it is. There might be some continued volatility around it here or there. But Iran was never really the big issue. The big issue is Russia. But Trump and Putin seem to be talking, and if Russia's taken offline in terms of the oil's going to shoot up in a big way, and it'll be a big problem for the overall stock market. But it doesn't seem to be headed in that direction. Now, Friday we get PCE prices. So PCE prices is a measure of inflation. We expect it to be up 0.1% versus April versus May, and year over year up 2.6%. So 0.1%, that's 1.2% annualized. We don't have an inflation problem. The Fed is focused on tariff inflation to start to hit the inflation numbers in the third quarter. We're not concerned about it. The money supply growth isn't growing fast enough for the tariffs to really stick to become an inflation problem. Now, here's something we want to point out to you. So this is the federal funds rate minus the PCE inflation. So what that's saying is that the federal funds rate is currently 4.4%. PCE inflation is roughly 2.6, right? So that's a big spread. So there's roughly close to 2% spread between the two. If you look back over a 10-year period, the federal funds rate and PCE inflation have been about zero or lower at sometimes, much lower, particularly after COVID. But you look at this period here, 2005 to 2020, it's averaged -1 to +1. So if you go zero, you have roughly 8 interest rate cuts in front of us. The market's going to start to figure this out and start to discount in there. The market's going to want the Federal Reserve to figure out there's no inflation in the economy and beginning cutting rates, and I think the market could run significantly. And by the market, I'm just not meaning the S&P or the mega cap tech stocks. I mean the broader market itself to really start to perform well. Some of those things that have underperformed, and I'll talk about those in a second. So what's in front of us now is we have the big, hopefully beautiful bill. Hopefully there's some cuts in there. And then we have earnings reports in July. So we have two probably positive events to occur for the markets. And then we're going to be looking at August, September, that seasonally tough period. So what we want to do is start to raise some cash as we go through there. Now, in terms of strategy, so there were several Federal Reserve governors that came out and said they're not seeing a big inflation problem, that the tariffs are not going to push inflation higher, roughly is what they said. So that's all really positive. So again, the markets need to believe that the Fed believes there's not an inflation issue and that rates are coming down. That's going to be very positive for the overall markets. One theme that we're thinking about, because it's timely right now to be talking about it, is autonomous commercial driving. Now, here's the robo taxi of Tesla in Austin. So these are all over Austin right now. You can go on YouTube and find some of the videos. They're pretty interesting to watch. But we think autonomous driving is an interesting theme. There's not a big way of playing it. So Tesla is an obvious candidate. Google with their WAMU. Why didn't they call it WaGo rather than WaMu? But anyhow, WaMo. Why did they call it WaGo or WayGo, I should say. So Google's Waymo is uh, is out there now, and it's probably has the most mileage of anybody, and so we think that's going to be uh, that stock will start to reflect some of that potential, even though there's some overhang by the search growth, and it's still growing by the search business. Amazon has a autonomous car that they're going to be testing in Las Vegas later this year, and then Mobileye is a great way of playing this pure play on the market. They're basically supplying everybody else that's wants to have a self-driving car, and so we think that's a nice sleepy way of doing it, but it has lots of upside potential. Used to be a big darling of Wall Street. So we like Mobileye. We own Mobileye. We bought it earlier, and we think there's a lot of upside. But the open-ended potential of this, it's a little bit murky how to play it, but it's an open-ended potential for the overall market. This sector is, so there could be some nice upside in the valuations of these companies. So one thing we would be doing is, because rates are likely coming down, is locking in some of that yield. So we like baby bonds. The baby bonds are yielding roughly 8%. After they bring down interest rates a couple hundred basis points, you're gonna not see 8% anymore. It's probably gonna be like 6%. So and some of the stocks as well. Some of those high quality names that have lagged that yield 4 to 6%. Pretty soon, likely we're gonna see rates below that 4% level, and those will be a nice way of playing lower interest rates. The tariffs. So tariffs have really hit some sectors really hard, particularly like the retail group. So Gap in particular is a good example of that. It really it pulled back in a major way. So we think Gap is really attractive in some of those retailers as the tariff fear goes away. And then another way to play this is RFK'd. If your stock was RFK'd like a food company or a healthcare company, we think those are going to come back as well. So one thing to think about. So the higher interest rates really impacted the housing stocks. We think Lowe's is a high quality company. The business is naturally starting to pick up. They're getting more business from contractors. We think that there's something going on just at the company itself. But as the overall environment improves, this 16 multiple could turn into 22, 23 times pretty easily. So it should not trade at a discount to the overall market. It should trade at a premium to the overall market. So again, our plan is, as we go through this positive period, to think about raising cash as there's opportunities to do so, and then having more cash than usual around that August, September period where it's seasonally weak. Now, this will all depend upon what the Federal Reserve is doing with interest rates, what sort of outlook they give in July when they meet. Here's the sentiment. So the sentiment has been really negative, and now it's turned to not so negative, and it could turn into positive. So when it's really negative, you want to be a buyer of stocks. When it's really positive, you don't want to be buying them anymore. You maybe ride it for a while. So it got down earlier this year down to about 62% of the market being negative. Now it's currently about 41% of bears versus 33% bulls. And what's normal is 31% bears. So that's 10 points it can come down. So that's a lot of dollars to still come into the market. So we like this as an indicator, how the market's feeling, and we think this will continue to improve, particularly if the Fed gives signals that they're going to cut interest rates. And then you got 4 to maybe as high as 8 cuts in front of us. So that's really going to spring up some of those sectors that have lagged in the overall market. The IPO market, it's starting to become really interesting. I sure love the 90s. I remember my buddy at Goldman Sachs, he told me, just buy them all until they stop working. And so that's kind of what we're saying now is buy them until they stop working. So let me walk you through this a little bit. So the IPO market peaked in 2021 with 1,035 IPOs. So that's a record. And then it fell to as low as 154 in 2023. And then last year was up to 225 IPOs. So that's up 46% from 2023, but it's still down, 78% from the peak. Thing to keep in mind, what happened in 2021, you probably had 100 or more biotechnology companies that went public, and it put a peak in the overall biotechnology market. But you also had 600 SPACs that went public. So you had a lot of stuff that probably should have never been brought to the overall markets. So far this year, there's 157 IPOs that have gone public, and some of them are really interesting. So this Circle Internet Group, CRCL, this has been incredible. So it went public at 31, and in roughly 2 weeks, it's at $264. So incredible move, 31 to 264. So what's going on here? And so what should we be thinking about? If there's a similar company that goes public, we got to get on it, right? Get on it early. So what they do is offer, a digital currency that settles in U.S. dollars. So, it's different than crypto. It can work somewhat like a Visa card, doing the cryptocurrency portion of it, but it always reverts back to the U.S. dollar. So that's kind of interesting to us. We think that has big potential to displace some of the credit card companies and just make transactions easier and less expensive. Maybe you could send a wire instead of being charged $25. You can use this service and it charge you a fraction of that. So we think that this has big potential. There's an investment banker out there that brought this public at $31. He's probably feeling like a fool right now with the stock $264. But just keep in mind, if there's other similar companies, and there will be, we want to play this. Now, CoreWeave, CRWV, it's had a big move too. But keep in mind, this was originally going to be priced at roughly $50 a share. It came public at roughly $40 a share. So they had to bring the pricing down of it. That's usually not a good thing. It went sideways for a good month, so it didn't do much, and then it's taken off. What they do is they provide data center capacity to companies like Microsoft. So that CPU capacity from NVIDIA, that's what they provide. To us, this is going to turn into a commodity over time. I don't think we'd own this one. Circle is pretty interesting to us. If that would pull back in a major way, maybe we'd enter it, but we're looking for something that's similar to that would go public. Now, I want to talk about Anavex a little bit. So one of my friends from the videos asked me about the stock, and I want to kind of walk you through what's going on there. So his question was, what's the odds of this being approved? Of course, really tough question, right? What's the odds of it being approved in Europe? So they're expected to get approval in December. So roughly 90%, a little higher than that, but roughly 90% of the drugs filed in Europe get approved. So the Europeans kind of look at things that they want to spend time on, and they don't take everything. So they take the stuff that they want to basically get to the markets. So they have a high probability of approval. But generally what happens is they file in the US, they get approval, then they go to Europe to get approval. This went the other way around. They went the other way around because the market for approval for Alzheimer's drugs is different than the U.S. So the Europeans look at cognition and memory. Well, excuse me. The Europeans look at memory, but not cognition. So the memory is what's important to them on their basis for approval for Alzheimer's drugs. This one has beautiful memory scores. The cognition, it's really hard to get good scores on cognition when you start on the early stages of Alzheimer's because your daily function is still pretty good. So in the US, they have both metrics, so cognition and memory. So what the US is doing is just doing the memory portion of it, but not the cognition portion of it. They're changing that. They just haven't done it yet. So when that happens, they're probably going to file for approval in the US, or they're going to have to do another phase 3 trial, is our guess. So it's kind of something that we've been well aware of. We think that they get approval in Europe, and then hopefully the US will modify what they're looking at, or the US may just look at the data and approve it anyway. So if I were them, I'd go ahead and file in the US as well, but maybe already kick off another phase 3 trial because it may be needed. The stock has tremendous upside potential. I mean, it has a good at least 10x upside on the approval in Europe by the end of the year. So we like that one a lot. AVXL, keep in mind, biotechnology they're not safe. It's the highest risk you can probably find in the overall stock market. But just keep in mind that this one has really good potential, and we think the data looks great, and so it's de-risked to some degree. So if you ever have any questions, just ping us anytime. Doesn't matter if it's right after the video, just anytime ping us. Come to my website, Patrick Adams CFA, sign up for a hard copy of Market in a Minute, and you can access, you can send us an email from there, or you can come to my company's website, PVG Asset Management, and send us a message. If you'd like for us to help you manage your money, we're more than happy to do so. So individuals and financial advisors, we manage money for a lot of financial advisors. So just let us know if we can ever be of any help. Take care.